think just for background, I mean, everyone who dialed in, I assume, knows Mika. I mean, this used to be his home turf for many, many years. He was based in the Bay Area. He was based in Seattle, if I get this right, at one point, right? And then 3 years ago, you moved to Europe, became a managing partner at Lakestar, which was one of the leading European venture capital firms. So when we said, well, Mika asked me, what do you want to talk about? I said, well, the one thing I would be interested in to hear your perspective, having reasonably recently gone back to Europe, of venture capital in Europe versus venture capital here in the US.
Great. Yeah, so a little bit more on my background. So I'm a typical INSEADer. I'm a nomad. So I've lived in New York 3 times, Seattle twice, Paris, Budapest, now Zurich, and most importantly, in Silicon Valley, here in San Francisco for almost 20 years. So I've moved around a lot, but the period in San Francisco was definitely very impactful for me, for my life, and for my current job. So I was an entrepreneur. I've started a few companies. I was fortunate in my first company. I had Michael Moritz from Sequoia Capital as my investor. So I had a very kind of well-known person. And then a latter company, I had Reid Hoffman from Greylock. So I just was very ingrained in the Silicon Valley culture. I lived in San Francisco. I was an advisor to multiple companies. I was a CEO coach. I was an investor in funds. I was constantly being recruited to be CEO of companies. And so I was in the mix, like deeply here in Silicon Valley, to the point even I was doing angel investing alongside Sequoia and alongside Accel. And starting companies is very difficult. And so I have many horror stories. And I see John here, who was at one of my companies at one point. It's quite a roller coaster. And I did 4 companies, and I think doing a 5th company would have probably been not a good move. And so, because I had a nice track record as an investor, I was able to parlay that to a venture job. I'd say that I probably should have done the venture job 10 years earlier, but I still had this entrepreneurial itch. And then I decided that being a nomad, and my family said, let's go back to Europe. And I thought my skill set of being an entrepreneur and deeply involved with the kind of VC community in Silicon Valley would be a nice kind of thing to bring to Europe, and really I thought that would be a good way to get a job there, actually. So, and it was. Everyone said, "Wow, this is a great background. Please come here." So, but I had also been, even when I was here in San Francisco, I had been an investor on boards. I was on INSEAD's board. I'd been very involved in European venture and tech at some level. So I knew all the VCs over there already too. So when I went to basically say I'm coming over, I knew who to talk to. So I also had this perspective of what Europe had been doing up until a few years ago. I was watching it since the early 2000s. I was involved in a Finnish company in the early 2000s. So I've been watching the environment there for a long time, and so it was fascinating to then be on the ground and really see what was happening. And I feel like a couple of my companies I started too early. Timing is everything in the startup world, and we can talk about that some other time. But I feel like I moved to Europe at the right time for venture. So I feel like I hit it when it was just exploding. And you could argue whether it was 3 years ago or 5 years ago, but it really started to take off. And I started really thinking about why now? Why is it happening now? And so I talk to a lot of entrepreneurs, other VCs. I'm constantly trying to parse, what's going on. Why did it take off now? And I would also, as the deeper I go into it, I realize it kind of started taking off all over the world around the same time. So it's not just, we talked about Argentina earlier.
I was about to say, so we've seen Latin America had record deployment of early stage capital, the US, of course, but Europe as well. And Europe has always been kind of, as a European as well, but long-term expat, I always get asked what's going on with Europe. Why are we not seeing the kind of momentum?
Mm-hmm.
And I agree with you. It seems like the last 2-3 years have been really kind of the day where Europe finally wakes up and starts catching up.
Yeah. And so there is activity all over the world because tech is just taking over. And I'll explain, I think, one of my reasons why I think it is working in many markets. But Europe, the concentration in the volume is just overshadowing everything else in the world. It is a really big jump in Europe, and it's a lot of companies. So we had 100 unicorns in the last year. And there have only been 300 in the last 10 years. So 100 out of the 300 in just 1 year. It was just like, it was quite an explosion. Partly COVID, partly all this digital stuff. But so stepping back, so to be an entrepreneur, you need three things. You need an idea, talent, and capital. You could argue you need a market to sell to or something else, but I'll talk about that in a minute. But these are the three things you need. This is the flywheel people talk about in startups. This is a flywheel. And for years, people had an idea, actually, you need a unique perspective on the world. You have to somehow see a problem, something differently. And I do believe that people all over the world have a different way of looking at things. I mean, yes, there's somewhat global culture, but everyone grows up in a different environment. So they just see problems differently. So if you had an idea in the past, the talent and capital weren't available in your local market. They weren't available in Europe. They weren't. So what did you do? You moved here. You moved to Silicon Valley, or maybe to the East Coast, because these are the places that had the talent to start the company, but also talent to scale the company. And so, I think it was 5 years ago when I gave a presentation here. I did some research and I saw a few articles about it that 60% of founders in Silicon Valley are immigrants. I'm not sure what the number is today. We've had a kind of a rough, it's been Trump and it's been COVID. So I'm not sure what the number is anymore, but the percentage was very high. I'm not sure I quite count for it. I am a first generation immigrant, but I didn't come here to start my company or companies. So, but they would come here because this is where they could get the talent and the capital. They had the ideas and the talent and capital. And what's occurred in Europe is that it took a while, but there are a few companies, whether it be IDN out of the UK, out of Holland, or Spotify out of Sweden, numerous companies from Berlin. There's some companies, they finally got to a point where they had an exit. And that started happening already going back 10, 12 years, but there's a lag when that started happening. So you started having these exits, and the exits then had founders who received capital, but more importantly, local investors received capital. And so you started seeing capital start coming in into the markets. And so the capital was because some companies were successful. And I would say also that, because the venture world in the US was doing so well, there was some growing venture. So Lakestar was started in 2012. Klaus Hummels, the founder, actually started investing, without the Lakestar name, already back in 2008. And so there were people like that were they were starting to do it. They were starting to get capital. They were starting to get going. So that the capital side was going. And then because there were exits and there were companies that had scaled, you started seeing talent who had the experience of being part of a startup and talent that had been part of a scaling process. Scaling a company is very hard. So it's going from 10 to 100 to 1,000 people is very, very difficult. Very few people know how to do it. Lots of people were working at a corporation with 5,000 people, and they might manage 1,000 people, but actually they didn't have to get them there. They kind of dropped in there. So this process of doing that. And so because there were these companies that did scale to some large size, and it wasn't that many. I mean, I can probably list them. There were probably 10, 15 companies, but it was enough that there were things going. There's enough capital. So people had the ideas. They could say, okay, I don't have to move to start my idea. I can actually do it right here in Europe. And so that started to happen 5-7 years ago. And then some interesting things also started to happen around schools. And there, whether it be KTH in Stockholm or ETH in Zurich or some of the Dutch schools, they all started to go, wait a minute, there is, people are interested in entrepreneurships and startups. We should start programs, because in the past, European schools, especially German ones, were really focused on training people to go into corporations. They were like, okay, whether it be accounting, design, engineering, you name the discipline, it was all about like, let's train people to go work for Siemens or Bosch or something. Yep. And then they woke up and they said, the school said, wait a minute, there's this, everyone seems to be interested in the other thing. We need to change our programs. And it was led, I think, by the Dutch and the Swedes. They started changing their programs, and they started doing things actually in English. That's the other thing, is that they're now like starting to compete with US schools. And so talent from even the junior level was suddenly being trained for startups. And everything just started coming together. I think, obviously, I do think that it's partly the influence of Silicon Valley on the world. Everyone just started seeing what was going on, and so. But I would actually say that the phenomenon was a groundswell from the bottom up. It was not a top down. The top started to respond to it. The universities and the governments, they all started responding to it, but it was a groundswell from the bottom of things happening. And so this just started going, and I feel like there's a few other things that really have kicked in, and some of it I'm very culturally sensitive when I say it, but I have to say it, and that is that startups from the get-go all work in English, and that wasn't the case when I would visit a French or Spanish startup 10 years ago. Finnish startups, pat them back on Finns, they would start in English, but a lot of Germans, you go visit them, and their PowerPoints, their internal presentations were all in their local language. And you think, what's wrong with that? What's wrong is that they're thinking too small right from the beginning. They're thinking about their local culture. They're looking at the local market. And if you want to hire some of that scaling talent from Adyen, from Amsterdam, they're not going to want to come to even beautiful Barcelona if they're speaking Catalan internally, because they'll feel alienated. They won't want to work there. So if you want to have a global business, a big growing business, you better start your thing in English. And also, most of tech is, it's engineering culture too. And engineers, they write code in English. And so the engineers also, as they started, as the engineering kind of culture started taking over a lot of companies, as opposed to it being kind of business, not to insult MBAs running companies, in Silicon Valley, the engineering side has really taken over the running of businesses. Engineers are coming from the English side. So I think the language part has not been talked about enough, but language is another reason that all the European companies, whether they be in Bulgaria or in Lisbon, they're doing things in English, and they're thinking globally about their market immediately. So that's my whole market thing is, I feel that, yes, the US is a large market. It's a built-in market. You could argue whether Europe is 27 countries in one market or not, but the market actually is, if they're writing in English, obviously they will have to localize if it's a consumer product and everything else, but they are thinking globally from the beginning about their business. So all these things come together, and it just took some time, and it just has been flying along now for 3 years. And obviously we'll see with what's going on. The external markets aren't as important for VC because they're obviously important for exits, but we invest. Companies that are 5-10 years on the road, they see the light of day. So it's not as critical, but it's just been, we can talk about US VCs coming there. I have so many examples of what's going on in Europe, but that's kind of my kind of like lay the land out there.
But I think the US VCs coming to Europe is a big story. I mean, I've seen quite a few of them, and I realize it because I have the MBAs that are in my class are coming to me and saying, hey, I'm getting a job offer from XYZ US VC in Berlin or in London. You mentioned early on, most of them are moving to London. Is that the right place to be? Probably not, I would argue, but I'm maybe too German for that. So, but they clearly have started to build larger teams, and which is exciting. One thing I could add to that as well, what I have seen is a lot of the corporates, even though they may have been slow to it, they're now realizing that they need to engage with the entrepreneurial ecosystem. And they have started to create corporate venture capital units, CVCs. They have started to create incubators, accelerators themselves. BMW, you mentioned, is running their venture client model. So they have tried to come up with different models to engage with those corporates, with those startups, and get some talent in, not just out of their R&D team. So let me ask you, what excites you right now, or what is your specialty, if any, in terms of verticals out of the whole tech soup?
Well, if I could talk about Lakestar a bit. So one of the strategic shifts we did for our current set of funds is we became thesis focused or sector focused, and it initially was because we realized that entrepreneurs really like to talk to people that know their business. They didn't want to be educating the VCs, which often they ended up being. So VCs love being generalists because generalists is kind of fun. You get to learn about all kinds of things. It's like it's the classic VC model is a generalist model. But what's happened in the last 10 years is that there become specialty funds. There are there are clean tech funds, there are climate funds, there are crypto funds, there are health tech funds. There's these very specialty funds that are doing quite well because they really serve the entrepreneur in the best way, because they know the business, they know what metrics to look for, they know who to hire, they know what the next round of investors should look like, they know who the corporate partners are, who the exits are. So being very specific, very specific sector focus is important. So we moved to a model where we now have 7 sectors, 7 partners lead them, and there's a full team underneath them of 3 or 4 people. And so we've really moved to that model. And so I think a lot of VCs give thesis lip service that, oh yeah, we're thesis driven, but they have multiple theses. And if you actually talk to the partner, they're actually covering a lot of things. We've actually gotten really serious about, I do games and media. And so I have 3 people, we work on that. And so we are very, very deeply focused on it. So what's great about that has been that, and we chose the sectors based on what we thought was the deepest markets in Europe. So you don't want to pick a sector that's thin, that doesn't have a lot of activity, that we thought also had a great future in Europe. And we also felt that it was a sector that is a kind of interesting thing, that we feel that there's kind of European sovereignty angle to it. So we feel like we want to make Europe stronger in some of these things. And so we want to invest in that area. So we chose them. And so we have a few sectors. I'll give you what we do. We do fintech, which is our strongest one. And fintech in Europe is extremely strong. And so, we could talk a lot about embedded finance and how fintech is taking over everything. So fintech, in some ways, for us, is actually more of a horizontal in a way, because it's in everything. But fintech, we do deep tech. So we've done a ESAR Aerospace, which is the SpaceX of Europe. It's a rocket company of all things. So that's kind of a European sovereignty play. We're in a version of GPT-3, which is this natural language kind of AI software, which is a European-based one. So it has a lot of more privacy things around it. We are in 2 quantum computing companies. So that's deep tech. We also do health tech with the European kind of angle around what's going on in health tech. Games, there's a lot of amazing gaming companies coming from Europe, and from all over Europe, even Israel, Turkey, Finland, Sweden. There's just incredible amount of activity around games. We also are doing logistics and mobility. Germans are amazing at logistics. And so there's a lot of, there are a lot of biggest companies over there, but the other new companies are also coming from Germany. So we feel like they're really doing global businesses. They're thinking globally right away.
Quite a few run by alumni.
Yeah.
Some of the
Zender. That's one of our big investments.
I know.
So David Nathacker. So then the final category, I think I covered them all, is marketplaces. And so that's also more of a horizontal. So we picked those partly because it has this kind of European angle, but also we want to pick ones that we felt like had large markets. So the challenge sometimes in VC is that there are some pretty good businesses, but are they really going to be 1 billion, 10 billion? So you have to pick ones that have the strong growth and kind of ambition around it. So, and so there are a few that are strong in Europe that we haven't done, that we've thought about. One is like cybersecurity. Climate is becoming really strong in Europe, and so we're actually starting to put our toes into it. We're starting to do some small investments, trying to hire people. So one of the things we have to do is, it's not just about doing investments; it's about having real expertise. So you have to hire people that really understand the industry. They've sat on boards, they've been operators or something. And so it's a process to pick a new sector.
Yeah, and that's to some extent driven by the regulators, right? So climate and regulation, anything around ESG regulation, is really the Europe is far ahead even of the US.
Correct.
So, so which will be interesting to see. Now, first on questions, everyone on Zoom, feel free to put your question into the chat. I will grab my laptop in a second. I will come for questions for the audience, but I have one more question I'd like to interject that, given that we have more than 10 people here in the room now, okay? So welcome to everyone on the right side who snuck in under the radar. Well done.
If you want to be on camera, I should move over.
You got to move over there and you're going to be on camera. So they believe me on Zoom, okay? So welcome. So I'll come for questions. I have one more question that I would like to discuss with Mika, which I get asked all the time. is valuations. So valuations are high, valuations have gone crazy in certain sectors. That's what I hear. But let's talk about valuation Europe versus the US. Clearly, there's still a gap from what you're seeing.
Yes. You could call it almost an arbitrage opportunity. I think that's why some of the later stage investors, and later stage being like Series C, D, E, like, pre-IPO, pre-exit, you're seeing a lot of large capital and U.S. capital come in. So you maybe heard of these companies, Tiger Global or Coatue or Insight Ventures. Even later than that was things like Wellington and Bailey Gifford. They really looked at a European company they look at, okay, that sector of a company, that stage of a company, what valuation are they at compared to a US based company? And you could say, is that apples and apples really? And if you look at market size, revenue, yes, it is pretty much apples and apples. And it's depending on which stage, it's somewhere between 20 and 25% cheaper in Europe. That's closing, but there still is a valuation gap. And I would say there's even bigger valuation. It's up to even 50% if you look at the earlier stages, like seed rounds and stuff. We don't have in the US now. We've seen like 100 million invested into, I think Andreessen Horowitz did 100 million into a seed round or something. You have not seen that in Europe. The largest seed rounds are maybe 10 million at this point still. But it's closing, and again, there are cycles up and down, but the overall trend in tech is just, if you look over 30 or 40 years, there are little bumps down, but it generally just keeps going up.
Yeah.
And so this has been, it's part of the reason why I think it's more the activity level, less the valuations, but Sequoia, Lightspeed, Bessemer, General Catalyst have all opened office in the last year. Not last 5 years, last year. So I think part of that was generally they saw the activity level, the quality of the companies. I should also mention that the quality of the companies. I used to get pitches 10 years ago, and it was embarrassing. They did not know how to pitch. They didn't really understand, how to actually build a company. It's completely changed, and so all these companies came there. But the later stage, they just see this valuation discount over there.
And I see it when we have investors asking me, I'd like to see some American startups. So you present the American startups, and then they're looking at the valuation at which they are raising. They're saying, we're raising at what? And it's really hard to get a European, including an Asian investor, to get comfortable with the valuations you're seeing here in the US. So there's always we want to diversify our portfolio. I'm like, okay, but just be ready, okay? So when we're showing you the opportunities.
I have a funny story about that. When my first month at Lakestar, I was shown a company here in Silicon Valley run by a French-Israeli, Alex Bouaziz. He started a company called Deal, D-E-L, D-E-E-L, 2 E's, not A-L. And he was in the Y Combinator class, and I got to know him over about a month period. And then I went to my partner and said, yeah, we could put a small investment. He's raising, I think it was 2.5 million. We could put 500,000 in. Oh, and the valuation's 15 million, and maybe it was 12.5. I think it was 15 million post. So, and my partner's just jaws dropped. They're like, he's just starting Y Combinator. They're nothing, and that was 3 years ago. Which now that same company probably would be 30 million or something, or 40 million.
Probably.
And now, but by the way, and I kick myself. This is a classic VC story. What did you miss? They're now worth 5 billion.
Yep.
They actually, their promise was true, and they actually did accelerate, and that valuation now looks cheap, obviously.
Sure. So, but that's venture capital for you. So valuations, yes, valuations globally are a really complicated conversation, as you can imagine, which we get at INSEAD all the time, because everything we do is on a global level, right? It's really, really hard to compare apples and apples. Let me ask questions. Any questions here from the room? Anyone who wants to kick us off? Yes, please. Hang on a second. Could someone pass you the microphone?
Make sure it's on.
I think you're going to click that little. Could you maybe help us?
Yes. It's on.
Perfect.
Well,
thank you.
Thank you very much for coming and for getting us together here. My question is, one of the things that you didn't talk about in this sort of process of VCs is the exit. Obviously, in the market for exits in the US is very, very active, and you need capital, you need entrepreneurs, but you also need a plan to exit those firms and generate the return. And how does that compare in the US? I mean, I know how generally it is in the US, but how does that compare in Europe, and what are you seeing in Europe?
That's a good question, because in Europe, you don't have the same IPO market you have here. That's been missing. We at Lakestar, we did the first European SPAC, and it's done okay, but Europeans just don't understand SPACs. They don't have the retail investing market even, which I mean, you can debate whether that's positive or negative in the US, the retail, but there's a lot of a base of people that do IPO investing in the US. And so the most successful IPO exits of European companies have been on the US markets. They come to the US. There have been quite a bit of activity by corporates buying companies. So I think the exit flow, I mean, the ecosystem this flywheel would not be spinning if it wasn't for exits. So I don't have, I mean, I'm going to send you some slides, but the exits have been increasing, every year. And so there is fantastic exit volume, but the one missing piece in the European exit kind of landscape is the IPO. And so some companies might go on smaller exchanges and you see some activity, and there have been some that have worked, but generally it's just been very, very quiet compared to what's happened in the US.
I have on the exit side a question from Alistair. Any specific routes that Lakestar specifically prefers? IPO versus trade sale? What are you seeing?
A little insight on this stuff. And so one challenge with IPO for venture is, when do you sell it and what do you do with that stock? And so, because we aren't public company investors, we don't have analysts thinking about the public company markets. And so, generally your LPs, they want cash as soon as it's available. So whatever route that is tends to be the way you go, which is sometimes trade sale, sometimes is the fastest one, sure, but it could be IPO also. So I think that's the main thing, is like whatever, and it's too bad in some ways. I think I don't know if people have read about Sequoia's new model, where they're just creating this evergreen model where they're going to hold on to all these public companies.
Yep.
I find that very attractive, because you get to work with an entrepreneur and you suddenly, you're gone from them. But if you really believe in an entrepreneur, the IPO is just the start of another phase. And so it's
sure,
yeah, anyway, but that is a challenge with, most traditional venture kind of structures, is that, the LPs want their cash. And so holding on to stock isn't necessarily what we want to do.
Right. So I'll take one more question from Zoom, and then I'll come back to the class. So Nicholas is asking, geographic location of a VC versus an entrepreneur, is it still relevant? You're personally based in Zurich. So would you invest in Europe only? So I guess it goes back then also to your mandate. So he gives an example. He says, our CTO is in another continent, yet we work daily with him. Mm-hmm. So is that a concern for you when you see that with a startup?
No. So we are in Berlin, London, and Zurich. We're about 45 people, pretty much evenly split. And we cover... So we say we're about 75% of our investments are in Europe. So Europe is our focus, and the other 25% have been the US. And we do US investments if there's a strategic reason. So they're European founders, they're looking to come to Europe. There has to be some strategic reason. We have access to some fantastic companies, but like that company Deal I mentioned, they were wanting to come to Europe, and so it would have been a strategic kind of story behind it. But Europe is 27 countries plus, it's pretty vast, and there are a lot of things happening in local markets. And so what we've done is we've now partnered with seed VCs in each country. So I think this is another thing to look at if I want to study like the growth in European market, the number of seed investors. So investors that have anywhere from 30 million to 100 million in capital, they've exploded. Every country now has multiple seed investors, and all they're focused on is the earliest stages. And so in those local markets have angel groups who are doing angels. So the angels are the first filter, and then there's the seed, and then we come into play. And so we work with these seed investors. There are more than this, but the number that we work with directly on a quarterly basis, someone in Lakestar calls them. We have 96 on our list. I do 17. I call 17 wow, a quarter. And I basically said, what's in your portfolio? What are you seeing? How can we help you? So we have this touch with them. So this is how we cover the geography. And so when I'm talking to seed VC in Estonia, they might mention a fintech company. So then I said to my partner, Nico Brand, I said, hey, Nico, there's a fintech company you got to take a look at. I heard about. So I'm covering the seed VCs and the geographies, but then someone else is going to go deep on the sector. So when it comes to this question about like, for us, it doesn't matter at all. And it was actually, it's, the European kind of, pre-COVID, the kind of fluidity of travel, it really works. And so we have 5 companies that are in Portugal, but only one is HQ there. Other ones have engineering teams there. We see that a lot. We have an engineering team somewhere, or you have a, even a kind of a marketing go-to-market team somewhere else. And so people like will find talent in one place. I have a company right now in my portfolio. They want to open an office in Italy, which, and not to be too negative on Italy, but Italy's been one of the slowest markets to kind of, they're now starting to do things, but they want to open in Italy because they want design talent. And they said, oh, in Milan, there's this great design talent. I can have 5 people there. It's really inexpensive. They're based in London. We want to open it. This actually works quite well in Europe. And I don't think people realize how fluid people are in terms of location across Europe. And I think that's been a strength of Europe.
Yeah. So well said. Questions from the room in the class? I have some more on Zoom.
Hello.
Yeah.
I got a question. Why the fintech is particularly popular in Europe but not in the United investment? And the second question I have is, if London is go away from the EU, is the IPO market move to Frankfurt for the setup?
Good question.
Good question.
Luck.
Yeah. Why? Yeah. It's an interesting question because you've had, Adyen is like the Stripe of Europe, and and they have Klarna, which is one of the kind of originators of buy now, pay later. So you've had some very large players there, but then you think of like European banks on a global scale, or there are no European credit. Visa and MasterCard are from here, and so if you think historically, Europe hasn't been that strong in the banking side, but fintech has been. I don't think I have an answer. I'll have to ask my partner Nico on why. I can tell you that going forward, it comes down to some of the regulations that they have had to navigate cross-border things very early on, and I think this is one of the reasons that by navigating across Europe, they're able to become global a lot easier than a U.S. company that just has one market to think about, and so then leaving the U.S. somewhere else. And so he talks a little bit about that, how regulation and understanding how to build a company with regulatory hurdles at each step is actually a very difficult task. And a lot of European companies, whether not just fintech, have been able to do that. So that's not a great answer to your question, but and then is it going to move to Frankfurt? I don't know. I'm not a public market guy at all. London has remained surprisingly robust to date. People talk about there's little cases here and there, but it hasn't. People haven't really abandoned it yet.
I would argue it's probably going to be a question on how the exchanges are going to take the opportunity, right? And there's Frankfurt, but there's also Paris, right? There's Frankfurt, there's Paris, there's potentially Amsterdam. Yeah. So I think it's up to the exchanges as a business to take the opportunity. Remains to be seen who is going to take over. And I would be careful to, after whatever it was, Big Bang or whatever, to claim the death of London. So be very careful about that. So take it from a German, right? So, which is, flying the British flag here. I should get some brownie points for that. There's one question here, which is interesting from Shyama on emerging trend of crowdfunding opportunities for retail investors to get involved in early stage startups. And Shyama, I'm going to expand that a little bit. So I get this question a lot, democratization of venture. I mean, what do you think about those platforms that basically give kind of quasi-retail investors access to dip their toes into startup investing?
The problem I've seen with all those platforms, first of all, they have all these kind of KYC and AML, kind of anti-money laundering. It's not easy for them to onboard people, and then there's lots of rules in the U.S. and various countries on how much assets you have to own. So it's like there's a big hurdle before you can actually let retail people in. That's one problem with it. But the other one is that I haven't seen great companies in those pools of kind of investments. I mean, I think where there might be on a retail level is if you buy secondaries. So there are secondary brokers who are selling, I don't know, was a private Stripe. I saw Stripe in the secondary markets worth 225 billion. I saw this morning. So that's not the same as investing in Stripe when it was worth 10 million. Because, and I've seen some of the platforms that have these companies, and you kind of look at them to see what companies are in there, and they're not the hottest companies. And so I do think that before those platforms really take off, you need to show some success stories. Like anything, they want to market that, hey, we've had these 5 companies and they all became unicorns and our investors made all this money, but I haven't seen that story happen yet. So maybe it'll happen, and maybe all the kind of regulations or rules will be easier, but I feel like it's a very difficult road. There are a lot of companies trying it. It's almost like if you're a startup founder, and I don't know, you would only go to those platforms because you're not being able to get the traditional VC money, or maybe you're just a rebel and you don't want to get the VC money. But generally, it seems like it's a backup move often. So that's why you don't get the best companies over there.
Yeah, I mean, I would add to that from a pure risk perspective, right? If you let retail investors in, do they have the risk appetite and do they have the risk capacity? I mean, just early stage venture. The stats are very clear. 8 out of 10 investments will not return the money that you're investing. If that's your risk appetite and you can have the capacity to allocate to that, by all means. I question how aware retail is. And obviously, after the last decade that we've had in venture, everyone is excited about venture. Easy to get excited. We'll have to see after the next drawdown how this excitement will last on the retail side.
I mean, AngelList is the biggest one, I think, probably. And
it's like, and most established one, right?
Yeah, it's done okay, but it doesn't feel like it's like this raging success. So
yeah. So any other questions from the room? I have one in the back, and then I'll go to John.
Hello. Hi, Mika. Mika, right? Mika. Thanks for coming. My question is about the disruption of VCs. We've seen a movement and we've seen some options, especially for B2B companies. Now they have access to debt financing and all of that. So my first question is, do you believe that VC market will eventually become disrupted? And if not, if it's going to be just another option in the market, right? And if this is part of your decision to go to Europe, if the market for VCs here is very crowded, or no, it's just because you guys are seeing that Europe is a new opportunity, a new blue ocean sort of thing?
I definitely think VC, their strategy would not necessarily disrupt it, but it's going to continually change. This was the biggest surprise to me, sitting on the other side of the table from being an entrepreneur, is that I didn't realize how dynamic VC is and how much strategy there is and how much differentiation there is between firms. And so I think that, VCs, they have to, in order for them to continue living to live the next day, they have to return capital to their investors. And they're always trying to figure out, like, how am I going to make the best investments? How am I going to structure myself to have the best returns? And so the disruption, I think, is only natural. I think it'll continue, though. There's been some VCs in the US that are just data driven completely. They just only look at data and they make their decisions based on data. Obviously Sequoia has a new model here. And so I feel that VC will continually evolve, and you'll see some more traditional VCs. You'll have the Oren Zeeves of the world, who is a one-man VC. He is. So I think there's just so many different flavors that I don't think it's going to be this wholesale absolute change in the VC. There'll be, what's interesting also is that these later stage investors, even hedge funds and private equity firms, are all going earlier. I just saw a private equity firm invest in a seed round, which is just insane to me. I don't know, but they're all the kind of borders between who's what investor and how they're structured, how they're structured with their LPs, how they are raising their capital. Maybe some people are just, there's so many flavors out there that I don't know if there's a one disruption going to happen. I feel like it's constantly evolving, and maybe we'll, if we come back, we could wake up 20 years from now, it might look very, very different, but there's still going to be some way that there is a humans. I don't think that computers are going to invest in people, but you're going to invest in ideas and try to help those ideas. So, and you asked about Europe. I didn't move to Europe because it was more greenfield. I moved there because I wanted to be in Europe. I didn't, it's funny. I didn't really go, yeah, I'm going to Europe because it's going to be an amazing market. It's going to be, I was like, what, there's always a market. And if you're good at what you do, you always find companies to invest in. So I was going to go there, and lo and behold, it became this raging market. And so what's also funny is that people panic over there all the time. They're like, all this competition, we had it all to ourselves. And now what's going to happen? I was like, this is what Silicon Valley has been like for 30 years. It's been like this cutthroat place where there's, people scrapping for new things. And so, welcome to the major leagues here, or the Premier League. This is what it's like. So I feel that it's, and again, as you alluded to, that there will be dips, and we'll see how some of these VCs react to some of the dips in market, because we had it here too in Silicon Valley. Every time there was a dip, you'd lose what we used to call the tourist VCs, or the tourist founders. They would be here because they were going to try to make a bunch of money. They weren't really in Silicon Valley. They didn't quite have the depth to really stick it out. And so we'll see what happens in Europe. We have tourists leave.
Yeah. But back to your question, for me, I'm really quite excited about the changes that I'm seeing in this space right now, because until 5 years ago, maybe, I would say, and I have tons of students in class that can prove that, right? That I would say that it's really, the model hasn't changed. It hasn't changed since the 70s. How can this model not change? When will the disruptors finally be disrupted? So I'm pretty excited about this. Not all will succeed. Right, we don't know whether the kind of tigers.
Do you feel like it's changing? Do you feel like it's changing, or is it?
We certainly have more opportunity now. So, for example, by the moment SoftBank and the tigers of this world came in, it basically forced every VC to say, okay, where do I want to play now? Do I want to play in their sandbox, or do I stay where I am and continue doing what I have been doing potentially for the last 30 years? And the founders will have to choose which model they will go for. But we didn't have that, 5 years ago. Will that model work out? Who knows? We need to look at cash-on-cash returns, and we need another 10 years for that, right? So, but I'm quite excited about it. I like change. I think change is good. Yeah. So makes for good case
we
study.
Definitely had, many weeks and continual conversation. Like, look what Tiger's doing. We analyzed it. We did a full analysis of how they did it, why they were doing it.
Everyone did.
And it was like, okay, do we adopt to that, or adapt to that, or do we do something? But I feel like you have to be unique in a market. You can, being a Me Too is the worst thing ever. And so, but there is some aspects of it. You're like, okay, they did it this way. Maybe that's something we should think about.
Yeah. So, and I think that's kind of, it's interesting to kind of nudge established players to think about their existing business model. So I think it will ultimately be for the better of the model, I like to believe. You had a question. So let's get you a microphone.
Hi. I have inside information about Mika's career from having known him a while, but I'm just curious about, when people come to you to ask you, what do I need to be conscious of or watch out for if I'm thinking about, growing in the States? Are there particular things that you tell them to be careful of or be aware of if they're leaving, Europe to set up shop?
So are they actually they're moving here? So
yeah, I've got perspective on public companies in Europe, and when they invest in the US, they tend to do it pretty much by acquisition if they succeed, it seems like. But and going back 10 years ago when I was involved in a platform, we would look for companies in Europe, and as you were, struck by their lack of ambition in going to the next country over, much less the United States, and that's changed. But I'm just curious, and what are the pitfalls of, what assumptions do you have to watch out for when you're coming to the States that you might have learned in Europe?
I think the biggest one is not taking it seriously enough. If you really want to come to the US, the best companies I've seen, actually, one of the founders will actually move. It's not they're sending off their, business development person or hiring a new person is the worst. I've hired a new person to work for a European. It's just they don't know the culture or anything else. Some of the best ones, they actually the CEO will move over, because it depends on how stable, what stage of business is. Can they leave behind or not? Obviously they're still managing across the ocean, but I do feel like they don't take it seriously enough. They think, oh, big market, we'll get a couple customers, we'll just hire a bunch of salespeople, it's all going to work out. But then they realize that actually it's harder than that, and you need someone who has a strategic mind thinking about how to actually crack it, and that's usually the founders of the firm, because they built that firm. They had to think about these problems when they're building it already. And so that to me is the number one thing, is like, take it seriously. And that means actually the person you're sending over, or the team you're sending over, it should reflect that. Yeah, I agree. So we have a question on the valuation opportunities between countries. Why, if there is an arbitrage opportunity, as you called it, why don't we see more VCs investing globally? So are there real global players? Are there people that are trying to do that arbitrage? COVID made the market global very quickly. It just suddenly you can take pitch meetings from anywhere. So the historical way for companies to get funded was, maybe the first meeting might have been on a video, but generally that was even in person. There were a lot of in-person meetings before you invested. And that was one of the advantages of being here in San Francisco. There were so many companies, or so many, like, they would just come to you. Like I rarely had to travel anywhere when I was even an angel investor. They're all somewhere around, or they would be flying in from New York or Europe. They all would come here. Sitting in Zurich. Sorry, no one comes to Zurich. But it doesn't matter, because it's all on Zoom. So, and I think that's what's really happened. And so I can't tell you how we're not doing much, but I've looked at African pitches, South American pitches. We have looked at a bunch of things in Indonesia. We haven't done it yet for focus reasons. Doesn't mean we won't at some point become more of a global VC. And I know a lot of VCs are becoming more global because they're seeing regional opportunities that have potential to be global companies. And I think COVID just changed the equation completely. And I don't think it's going to change back. That's the way it's going to work. So.
And I take the last question from Alistair, because we're almost running out of time. Apart from making money and strengthening Europe, do you think any other VCs in Europe, including Lakestar, have more of a sense of a higher purpose these days than in the past? So, I've been asked to, I'm doing work right now on ethical AI and sustainable AI in the startup space. So is kind of ESG something that is being brought up more often than in the past?
Absolutely. So, I don't know if people know, but there's now EU regulations where even as investors, we have to track ESG, all three of those things. And there's actually a deep survey we have to do. So we had to go backwards, look at all of our portfolio companies. And so the beginning part was just reporting on it. Then the next phase, there's a whole rollout. Next phase is we have to be proactive, actually trying to help our companies, achieve certain goals in E, S, and G. And I can tell you that the air has changed a bit, that the partners in our firm, and that's not just us, others are all thinking about it way more than they ever did. It's just in the air now. It's like they want to do it. There are a lot of funds that are, dedicated climate funds or other things. So yes, there are people who are just trying to make a return and money, and they're probably in crypto. But so they we've done quite a few crypto investments, but yeah, there's a little cut there. But there are people who like to do that. But then there are others that are like, okay, we're going to try to do something positive for the world. So the question is, can you do both? Can you do something that's going to make money and do, so a lot of people got burned in the late 2000s. There was a whole clean tech revolution back then. And I think no one made any money from that. But it feels different this time a little bit. So we'll see. So the question is, can you weave it into what you do, including crypto? Can you make sure that has a positive impact also? Yeah.
So on that note, I think it's a positive note to end as the business school where we're promoting business as a force for good. So Mika, thank you very much. Thanks for making time. You have a busy schedule whilst here. Thank you everyone for coming on Zoom, for sharing questions. As always, as I said to Mika before, there's never a shortage of questions when we bring INSEADers together.